Today, some of the indices formed an inside day, and there's only 36 hours left before. Now, we come over and look at how the indices fared across the board today. The Dow was down 114 points. The NASDAQ was down 72 points. S&P 500 down 23 points, with the Russell 2000 being up 0.15. We look at advancing issues versus declining. We had 58.1% of issues declining on the day. Then as we come over and look at the sectors across the board, a majority of the sectors were in the red. Healthcare was one of the bright spots out there, being up 0.39, followed by utilities, consumer defensives, and basic materials. Now, when we come over and look at the QQQs today, notice we formed an inside day, and we did see the indices in the red, but you know what else? We also seen the volatility index in the red. So who is telling a fib? Is it the VIX being down today saying, hey, there's nothing to worry about, come on in, the water is warm? Or we can see the VIX spike up and see the S&P and NASDAQ come down and start working on trying to fill some of these gaps left behind. If we come over and look at the fear and greed index, right now we're sitting at 69, which is exactly where it closed out of yesterday. Now, if we come over and look at the first article right here, is Japan finally about to go bust? And what it basically goes on to talk about is the 10-year yield is absolutely screaming up, and they have so much debt from all the QE programs that they've enacted over time. You can see this chart right here just absolutely screaming up. And look at the 10-year yield. It has not seen this level going all the way back to 2008. Jamie Dimon, the man himself, is warning us, saying, watch out. Too many traders are becoming complacent in the market, saying, come on in, the water's warm, there's nothing to worry about. And what Jamie Dimon basically goes on to say is he is worried about risk of record U.S. deficit, aka that's exactly what Moody's was saying as they downgrade the U.S. debt. Also worried about tariffs and international tensions. Now, let me know in the comment section down below. Do you think Jamie Dimon is correct being concerned with these three things? And do you think the U.S. economy will enter a recession here in 2025? Now, I want to come over here real quick and toot my horn. Right over here this morning during the live stream, we gave out this zone right here. And if you guys were on the live stream, you've seen how we basically developed the zone. This afternoon, what did the NASDAQ do? Came right into that zone, rejected out. Now, if you guys want to make sure you don't miss the next time I go live, make sure you're subscribed. You have the bell notifications turned on for all. Today, we gave away another Take Profit Trader account. Now, it wasn't only the NASDAQ that we had a banger of a level out here, but if we come over and look at the S&P, notice the S&P today. What do we do this afternoon? We wick right below that level, bink, we bounce right back up. And if you look, last night, we saw the futures markets did make a new high, unlike what we saw with the SPY with an inside day, or like the QQQs with an inside day. And if we look at this on the 5-minute chart, notice the NASDAQ today, we did not fill the gap to the downside. We look at the SPY today, not filling the gap to the downside. However, the Dow, right when we opened up, wicked up, filling the gap. Then we saw the Russell 2000 gap down today and fill the gap. So we had 50% of the indices filling the gap today. And will the NASDAQ and S&P join the parties tomorrow? Well, if we come back over and we look at the SPY real quick on the daily chart, we can see that today wasn't inside day. MACD indicator maybe starting to show some early signs of weakening here just a bit. But the MACD indicator has been very strong for quite a bit of time now, for several weeks. And we have a slew of gaps below us that at some point should come back and get filled. Now, when we come over and start looking at the 4-hour chart, we just barely started to get a bearish cross of the MACD indicator today. And then as we look at the 30-minute chart, I want you guys to pay very close attention. Tomorrow is likely going to be a breakout or breakdown from this pattern. However, I do have a small problem with that scenario playing out. But if we look at today's volume profile, if we start breaking tomorrow below value area low, I want to look for today's lower range to be tested. And then also this minus development area that we drew out a couple days ago, where the market basically opened right near that zone, rejected right back out. I do think we're going to come back and re-auction that area in the very near future. Now that zone is going to be anywhere from 587.99 down here to about 586.90. Also, notice what we have out here on the 30-minute chart. Look at the MACD indicator. It is down at the zero line. So if we get a cross back up, this could be nothing more than a consolidation, basically working off some of that upward momentum that we've had and getting ready to make a run towards all-time highs. Can't stop, won't stop. Markets only go higher. Now I want to bring to you guys 4 amazing prop firm deals. Apex Trader Funding, 80% off all their valuation accounts. With My Funded Futures, you get one free reset. So if you want a YOLO one, it's kind of like buy one, get one. And if you're new to My Funded Futures, 50% off any evaluation account. Tradeify, 35% off all accounts. Last but not least, Take Profit Trader, 30% off all their evaluation accounts and daily payouts possible. To take advantage of these offers, use the links in the description box down below. Then as we come over, look at the 4-hour charts real quick. You can see yesterday we came down, boom, we ripped right back up. And I want you guys to pay very close attention. Notice the down candles that we had today compared to the up candles. We have not seen any real large selling candles in over a week. The sell candles have been very, very small. Now, if we were to pull a fib real quick from the low of yesterday all the way up to the high, notice where we came down today. We basically wicked that 61.8 Fibonacci level, and then we rejected and we closed out with a hammer candle. Now, if indeed that's going to be as low as we go, this could be setting up an A to B equals C to D pattern on the way up. And we would measure from the swing low up here to the swing high, pull it back down, and then we project that ABC price completion all the way up here at 6,027. Now, when we come over and look at the daily profiles real quick, you can see that a majority of today, we basically just chopped around on the live stream. It was a whole lot of chop going on. Now, if you look at the volume profile levels, we have a relatively tight volume profile range. 59.69 and a quarter will be value area high. The point of control will be 59.60 and a quarter, with value area low being 59.52 and a quarter. Now, notice we are right near value area low. If we start breaking back below that level tonight, I want to look to retarget the candle bodies down here by the lows and then see, can we run the lows out here from today? If so, then I want to turn my attention back over here towards this high volume node over here from yesterday at a price point of about 59.09. And again, it's a very easy if then syntax. If we're not trading below value area low, then I'm not worried about the lower targets down below us. Now, if we come over and look at the dollar index today, dollar index on the move lower, then we look at the 10-year yield. 10-year yield, kind of a candle of indecision. Wick on the top, wick on the bottom, but I really believe the 10-year yields trying to work up towards this ABC pattern completion at about 4.86. However, that pattern is not validated unless the yields can break above 4.59%. If we simply turn right down from this level, this could be nothing more than a double top. Top number one, top number two, and that would bring us all the way back down towards a recent low. If the yields start going lower, that would be a very bullish sign out here for the stock market. Now, something that does have me a little bit concerned if you're looking for stocks to go up would be the price of gold. Gold today rocketing on the way up $63. Now, we breached the 50% retracement level, and that is really lending to the possibility we're going to come all the way up towards the 61.8 at about 33.24, which is also near that high volume area right here on the composite profile. But something like we talked about on the live stream, is that going to be nothing more than setting up an A to B equals C to D move for another move lower? If we come up towards this area and the market simply turns, we would grab our Fibonacci extension tool and measure, and that gives us a price completion at about 3,005. However, that pattern, remember, would not be validated unless we turn from that point and we come down and start breaking that level. We start breaking the swing low down here at about 31.21. However, if we do start to turn intraday, we could still use that ABC target for a huge runner target out here. Jumping over and taking a look at the QQQs real quick, notice what we have, right? Basically inside day, which means tomorrow is likely going to be a breakout or breakdown from that pattern. However, here's the problem that I have with that taking place. And that is when we look at the economic calendar, we look on Monday, no economic news. We looked on Tuesday, no major economic news. We look on Wednesday, another day of no major economic news. However, in about 36 hours, you can see that right down here, we do have a little bit of economic news, which could push us out of this consolidation area that we've been in. You can see we have the weekly unemployment claims coming out at 8:30. Then at 9:45, we have flash manufacturing PMI, followed by flash services PMI. 10 o'clock, we have existing home sales. Then on Friday, we have new home sales. This week has been very, very light in terms of economic news, and we have felt the pain with the slow markets out here this week. Jumping over and look at the 4-hour chart, we just barely got a bearish cross of the MACD indicator, but for all intents and purposes, we've been doing nothing more than have a push up and consolidating these gains up at these upper levels. Now, as we come over and look at the 30-minute chart, notice how we basically rejected right off the low. We can clearly see today's range was contracted. Look at it compared to yesterday, very, very contracted range, and the high was lower than the high from the prior day. Low was higher than the low from the prior day. And again, that sets up a breakout or breakdown from this pattern. However, if we start trading below value area low tomorrow at about 518.79, I want to look to target near the lows of today. I don't want to target the absolutely wick, but I want to target near the lows, maybe somewhere around 517.13, somewhere in that ballpark. If we can break that low, then I want to start looking for some of these lower prices. And some of those lower prices could be trying to hold out for multiple days, like this gap right down here, a smaller gap at about 507.78 to be filled. At some point, we will start to get a pullback in the market. However, is it going to be this week or is it going to be later on? As a reminder, when we look at the daily charts, look at our Fibonacci retracement level. The 38% retracement is all the way down here below that large gap from last Monday. And then we still have that little gap that I shared with you guys just moments ago. Jumping over and looking at the futures markets real quick, what do we got going on? Well, on the 4-hour chart, again, similar to what we talked about with the S&P, look at the large up candles. Do we have any large down candles? Not yet. Right now, bulls have definitely been in control, and I do still think that we're going to try to make our way down towards this minus development area. We came into it Monday, boom, rejected back out. We come into it a second or third time, then I think we go all the way to the other end, and then maybe start working on some of the other minus development areas that we've been talking about in previous videos as well, and then maybe working our way down for that gap being filled. As we come over and look at the daily profiles real quick, you can see that we have a very well-defined consolidation. You can see where all the volume was built out today. And if we look at value area low, that's going to come in somewhere in the ballpark of 21,388.75. Point of control will be 21,429 and a quarter. Value area high will be 21,460.25. Now, what we want to look for is tonight. Do we break value area high? If the answer is yes, we can look for the market to re-auction this area right here. Why do I say that? Look how thin, look how poor the structure is on the volume profile. Now, if we just simply break value area high, then we come back down, I'd want to target the point of control. I'd want to target value area low. I'd want to retarget near the lows of today. And if we can break the lows of today, I'd want to turn my attention back over here towards the high volume area of yesterday's profile at about 21,200. Now, if you trade with Tradeify, I want to warn you guys of something. If you're looking to get a payout, do not do this one thing. Otherwise, it's going to be extremely difficult. And to see what that one thing is, make sure to watch this next video right here.